What's going on, you guys? My name is Zach Hartley and welcome to my channel. If you haven't seen my videos over the last year, I've been buying and reviewing different trading and investing courses and posting the videos to my channel. Now, the goal of these videos has been to try and help people understand what course is going to fit their investing style the best and their lifestyle the best. And hopefully I've helped a couple of people make that decision. And so here's the breakdown of what I have done so far. We've done 7 courses from Daniel Pronk, Brandon Beavis, Charlie from Zip Trader University, Ricky Gutierrez from Learn Plan Profit, Meet Kevin, Humble Trader, and just recently we finished up a $2,500 US course from Umar Ashraf. Now, there was a little variety in these courses, whether they were day trading or long term, but all of them were really good courses. And so now what I want to do for you is kind of distill everything I learned from all of this time and effort into 3 very important lessons that I think everybody should know before they get started. All right, so lesson number 1 here, and I think I realized this by like the 4th or 5th course, is that there is no golden bullet when it comes to stock trading and technical analysis. What you need to focus on and understand is how the markets work, how to read a chart, and how to understand supply and demand forces. Everything else on top of that, all of the indicators and all the fancy lines and everything that you're doing is literally just an interpretation of the supply and demand forces for that stock. And so there is no golden bullet to technical analysis. There's no one indicator that's better than the other. There's no one strategy or methodology. What you are trying to do when you do and you perform technical analysis is you are trying to understand the supply and demand forces, and then you're trying to make a trade based on what you think is going to happen to those forces over either the short term or the long term. And so here is what I did learn. Obviously, there's no silver bullet. There's no golden bullet. Exactly what I think it's silver bullet. I don't think it's golden bullet. I think that's wrong there. There's no silver bullet for technical analysis, but there are some trends that I picked up on after going through these courses. There's some things that all of the successful people do. And the number one thing is that they identify a direction in the market. Is the market going up? Is the market going down? Or is it just trading super choppy right now? And is it going up and down within the same day? First thing that almost everybody did in these courses was identify a market direction, and most of them are also trading on a catalyst. Whether it is a market catalyst or an individual company catalyst, they are finding a reason for why they think that the supply and demand forces are changing, and that is what is giving them the edge. They're not going in and trading just based on regular volume and trying to figure out whether it's going to go up or down. They're trying to find an edge, they're trying to find an advantage, and they're trying to use that edge and advantage in line with the market direction to give them the best chances possible of making money. It is not a 50-50 game here. All of the people that I have watched here and all of the courses I have taken are trying to improve their odds as much as possible. 1, through market direction, 2, through finding a catalyst, and 3, through identifying supply and demand forces and areas on the price chart and in the marketplace. That is what is happening anytime somebody does technical analysis. That is what is happening when you look at a chart. And that's what's happening when you look at and try and evaluate a company, is you're trying to understand, is there going to be greater demand for these shares in the future based on either the cash flow and dividends that they're generating or the earnings potential of the company in the future. That is it. That is what we are trying to do here. And there's no silver bullet for technical analysis. It comes down to how well you can do these first 2 things and then try to understand the individual supply and demand forces behind that stock. Now, lesson number 2 here was really, really important here, and I think this is really the big separator between good traders and poor traders, and this is probably the main reason that people go out there and say that 90% of traders fail. It's not because they didn't know which stocks to enter or what trades to take. It's because they didn't know how to manage their risk as a full portfolio and in the individual trades. And so risk management, in my opinion, after going through all of this is what separates a good trader or a bad trader, and the same thing with an investor. And so here is what I've kind of taken away from all of these different risk management videos is, number 1, you must have a strategy that breaks down how you manage risk. All of the people that I've talked to, all of the people that I've learned from in all of these courses, they all talk about very clearly defining your risk tolerance. How much are you going to put in a position? How much are you going to put in an industry? What is your maximum drawdown per trade that you're willing to accept? Where are you going to put your stop loss? All of those different questions and how you manage those different scenarios should be very easily communicatable through oral, just talking to somebody, or you should be able to write it down on a piece of paper very, very simply, and those rules should not change. Your risk management strategy should literally just be a set of rules that you follow to make sure that you don't lose a bunch of money. It's very, very simple, but very, very few people do it. Now, the other thing that I learned, and this actually didn't happen until Umar Ashraf's course, and I thought he did a really good job of it, but he noted, and he kind of brings up this idea that the risk profile of a trade changes as the trade progresses. So let's say that you're buying a stock off the bounce of $10 and you enter in with a stop loss at $9 and you're looking for it to go up to 14. Well, if all of a sudden the stock gets up to $13 and it looks like it might not hit 14, if you look at the risk to reward ratio in that scenario, your stop loss is at 9, the stock is now at 13, and you're trying to go for 14, your reward there is only 1, while your risk is 4. And so you now have a risk of 4 and a reward of 1. And he made a really good point that risk to reward profile and that risk to reward ratio changes as the trade goes on, and therefore you need to adjust your trades. You need to change how you look at the scenario, and you need to be on top of it, and you need to be paying attention to it, because as that risk to reward ratio changes, your mentality and your thoughts about that trade should change as well, and possibly your executions as well. So that was a really, really good lesson that I just learned in the recent course. So I was really happy to see that one. And the third lesson that I thought was really important here that I learned from everybody was to build a routine, and that the trading day starts on Sunday. Monday, Tuesday, Wednesday are the big trading days, and if you don't have a game plan on Sunday night and you don't have an idea of what is going on in the market, what happened over the weekend, and what happened at close on Friday, you're going to be behind the 8 ball. So you need to spend Sunday night getting ready to go for Monday morning. You need to be up and at it before the market starts, and you need to not rush into a trade. That is one thing I noticed here, is that there's a couple traders online and on YouTube that will trade the first few minutes, but there are very, very few of them, and most of the people do not take a trade in the first 5 to 6 minutes on the market, and they try to be done by 11:30 or 12 o'clock. And so day trading is a very, very unique full-time job, but it really helps if you can build a routine, and it helps if you can get started on Sunday night to have a game plan for when you wake up on Monday. You also need to have a game plan before you enter any of your trades. You need to have a risk management strategy for getting into those trades. And you also need to have a profit target when you enter a short-term trade. And ideally, you want to try and get really good at just 1 or 2 types of trades. There are tons of different patterns out there. There's tons of different strategies. There's hundreds of different indicators out there. But if you can just get really good at 1 or 2 different types of trades or strategies, then you can scale that up with just increasing the dollar amount. And that is the road to success here. That is the path to freedom, and that is the way to do it. You do not need to be a jack of all trades when it comes to investing and when it comes to stock trading. You just need to be really good at one thing, because it's easy to increase that dollar amount. Now, if you want to check out any of the review videos that I did, they're all posted on my channel. I'm also going to put this summary video in there, and I am soon going to be making a video about my trading results after taking those 7 courses. I'm even going to do a little experiment where I go away and I trade based on certain people and what I learned in their courses. So if you want to see any of that, definitely subscribe to this channel, hit that like button. I'm also going to be making a couple of videos about the best trading journals that I can find. So hit that like and subscribe button, and we will see you guys in the next video. Thank you so much for watching this series. Thank you for watching my videos, and we'll see you soon. Good luck trading, good luck investing, and we'll talk to you later.